In my last video, I talked about why and how Bank of Canada shocked the entire Canadian economy by not raising the interest rate on January 26. Well, there were several reasons I touched upon in my last video, but there was another reason which I did not talk about it in my last video. We're going to talk about that in this video. So without further ado, let's dive in. So I touched upon last week that one of the main reasons why Bank of Canada did not raise the interest rate is the fear that the economy cannot sustain, the economic growth cannot sustain if we raise the interest rate right now. Because it's not just about housing. Of course, housing is one of the fundamental reasons why the rates should go up, because the inflation is running hot, 4.8%, even though it's underreported, I believe. Everywhere else is over 5, US 7.2%, but let's assume that 4.8% is the accurate inflation rate. It's even higher than the target rate, which is 2%. So the inflation is running hot, housing is out of control, like the market has gone crazy. We are seeing 26% year-over-year price increase, and there is no such thing housing affordability in Canada, especially in Ontario and Vancouver, cities like that. So everything is going crazy, like real estate market, inflation is running hot. So all the major economists, the financial advisors, the expert, sitting on these big six banks, they were, predicting and basically recommending the rate hike as soon as possible. But Bank of Canada, came out and they did not execute that plan. Now, even though they said they have laid out their plan that, they are going to raise interest rates further down the road, but they did not mention any particular date. We're expecting this is going to happen in March because that's the next round of monetary policy update. But we will see, how this will play out. But I think I touched upon, it's not just housing, it's not just the Canadian economy, it is something else. And the something else is basically the Canadian federal government. Like, if you look at, who is the biggest borrower in the economy, it's not household, it's not corporations, it is Canadian government. Like, I'm going to share with you something here. So this is Stats Canada website. Okay, so pay attention to this paragraph. I'm going to read it for you. Okay, so they're saying the gross debt of the CGG, which is Canadian general government, that includes the federal and provincial both, jumped to 129.2% of GDP in 2020 from 105.3% in 2029. The highest level ever recorded. Okay, so that means sum of all liabilities is reaching $2.8 trillion. Okay, or 74,000 per capita in 2020, an increase of 10,000 in debt for every Canadian in just 1 year. Okay, this increase in debt, which is $417 billion, is primarily driven by massive deficits, which is 325. So Canadian government run a deficit of $325 billion in 2020, generated to finance numerous relief measures. What were they? In the form of transfers to households, subsidies to businesses during pandemic. Increase was also caused by unprecedented liquidity support, measures to stabilize the economy and preserve the financial system, such as funding for emergency loans, purchase of assets, notably mortgages. Now you can connect the dots. For the first time since 2012, the federal gross debt, $1.46 trillion or 66.4% of GDP, surpassed that of PTLG, which is provincial, territory, and local governments, $1.465 trillion, okay, which is 66% of GDP. So they are coming close. The federal government GDP, gross GDP for the debt, and provincial and local government gross GDP for the debt, they are coming very close. The federal government contributed 3/4 of the increase of CGG's gross debt in 2020, including issuing $321 billion in new debt securities. The Bank of Canada has played an important role in supporting the federal government's debt operation, which exceptionally held about 33% of the federal treasury bills. Bank of Canada is the biggest buyer of the treasury bills. Okay, that has contributed a lot of liquidity in the system. Okay, so now this is not my words, this is Stats Canada's words. They are saying that the Canadian government, the federal government, is the biggest borrower of the money. They expanded their debt, from 105% of the GDP to 130% of the GDP. You can Google it in the history when the countries have defaulted on their own sovereign debt. As soon as they hit over 70% of the GDP. That's what we have seen in the history. Now we are seeing the countries like Canada is reaching 130% of the GDP in terms of its total debt. So if you look at things in the grand scheme, like at the macro level, Bank of Canada doesn't care about household. They don't care about housing market. They care about the federal government rising debt level. What will happen if the interest rate goes to, let's say, 5%? How government can pay back this huge amount of debt in terms of interest payment, right? If they start paying interest rate based upon the 5%, the amount of capital that is required to pay back is going to be huge, and we don't have enough capital left to spend money on healthcare, education, other welfare projects and business investments. So money has to be diverted, right, from paying for healthcare and education and other welfare stuff to paying off interest. So that is the biggest piece of information which is not clearly visible in mainstream media or press conferences like Tiff Macklem, who were answering questions, because all of those questions were pretty much pre-scripted. So that's the main reason. I should not say that's the main reason. It's one of the biggest reasons why the interest rate cannot go up significantly. They may raise, maybe a few basis points, multiple times. The overnight rate may go to 1% or 1.25%. It may not make a huge impact in the housing market because a lot of people are opting for variable interest rate. With 1.25% overnight rate, the variable rate may be 2 or 2.5%, which is still considered good as compared to fixed interest, which is close to 3%. So that's what I'm trying to say, that guys, this is not about housing. This is not about a household debt. This is about the entire country's federal debt, which is enormous, and it has gone enormously in the last 2 years. And the Canadian government cannot sustain its spending power if the interest rate goes from 0.25, let's say, to 3 or 4 or 5%, because there is a likelihood of our own government getting default on the debt if the interest rate goes up significantly. So that's what I wanted to share this week. I hope this is helpful. If you like it, give me a thumbs up and hit subscribe, and I'll see you in my next week video. Take care.